are now tuned into the Money Level Show.
Hey everyone, we are back. I know it's been a little while, been uploading a few interviews here and there, but I am still here. I'm still doing my research and due diligence in the background. So I'm looking forward to sharing some of that with you all in the coming weeks, especially as we are into a new year, 2025. This is the fifth year that the channel has been going strong. So I appreciate all of your support and everything. And today we're going to talk about gold and what's happening with gold, and just kind of read through an article just to see what are people saying about gold. We haven't seen a lot of information put out about gold. There's been a lot of hype around quantum stocks, quantum computing. There's been a lot of hype around the S&P and the NASDAQ hitting all-time highs, hype around crypto and Bitcoin and such, but we haven't heard much about our favorite yellow metal and outside of uranium. But we're gonna dive into what's happening with gold. Are we gonna see a $3,000 price target on gold this year? And I also want to talk about what stocks I'm buying. We recently had some big buying opportunities in some of the energy sector, as well as some of the other stocks. And so I'm going to share just some of the stocks that I'm buying right now and what I'm looking at. So let's go ahead and get into it. So I'm going to go ahead and share screen real quick. Okay, so here we go. So this is an article I ran across. It talks about gold rose 26% in 2024. This article was written by Forbes, and here's why the rally may continue in 2025. Okay, so it says on the final day of commodities trading in 2024, one precious metal ended the year preceding having recorded some pretty spectacular gains. That is gold. At the close of trading day in Asia, it closed at up nearly 27% for the year at 26, so 2,626. And when we look at the charts, I mean, you're going to be able to see that gold's been, I mean, it rallied almost to pretty much 2,700, a little bit above 2,700. And it's been staying pretty healthy just at the levels it's at. It's found some support, and it seems to be 2,600 is like the support level for gold. But we'll look at the charts and get more into that. But a series of record-breaking rallies for much of the year saw gold climb to an all-time high of $27.90 an ounce on October 31st before cooling off. And so what happened when we cooled off? I mean, obviously we had the election, and some people probably felt like, oh, you know, if Kamala would have won, I mean, gold price would have probably skyrocketed more. But since Trump won, some people started selling off gold and getting more into a risk on investments and such. And so, however, I don't think nothing stops this train with the debt and deficits. I think that the debt and deficits are going to continue to go. And regardless who's president, it's just, I feel like we're at the point of no return. So people sold off their gold, but I didn't sell any. A year of significant gains largely came courtesy of interest rate cuts by the U.S. Federal Reserve in the latter half of 2024. So many of you know that the Federal Reserve started cutting rates in 2024, and they said that they were going to do fewer rate cuts coming up in upcoming year, but we'll see what the pressure from the upcoming administration looks like on the Federal Reserve, and if they cave to that pressure. Obviously, the U.S. is paying a lot of money on its interest expense. I mean, that's like one of the top four major expenses for our deficits in our budget. So we have Social Security, Medicare, military, as well as interest expenses. So how long can our government continue to pay, trillions of dollars in interest on their debt? And so that remains to be seen. And then we see investors seeking safe haven in a volatile world also park their money in gold bullion in greater numbers, despite it being not a non-yielding asset, and sparked a demand frenzy, as did central banks, which we've talked a lot about central banks buying gold. Here's why the gold rally may extend into 2025. Of course, the U.S. interest rate outlook will be a primary driver of the direction of the gold price. The Fed said that they were going to do fewer cuts in 2025. However, this may not necessarily spell the end of the gold rally. Incoming U.S. President Donald Trump's trade policies may take center stage in shaping inflation that will likely have an impact on the direction of interest rates and, as a domino effect, the price of gold. So if Donald Trump's trade policies take center stage in addressing inflation, and that has an impact on the interest rates, and interest rates have to come down because the dollar is too high relative to other currencies. The dollar needs to come down, and so interest rates will help do that when interest rates come down. High interest rates may reduce the allure of gold for investors, but it is also considered to be a hedge against rampant inflation. I think it's more than a hedge against rampant inflation, but I mean that's kind of been the narrative for a long time. It's insurance for your money. So support may continue to arrive from elsewhere, including from the world's central banks, despite a slower rate of buying in the third quarter of 2024. Central bankers will likely remain bullion hungry in 2025, with the Reserve Bank of India and the National Bank of Poland leading the pack, according to economists at ING. So that's pretty interesting. I didn't know that the Reserve Bank of India and the National Bank of Poland are getting into buying gold. So, I mean, I'm sure they've held gold. I think there was something with India and demanding their gold from the UK. I think it was the COMEX or something like that. I forgot what I read, but this is pretty interesting. So can gold hit $3,000 in 2025? Myriad geopolitical risks from the Middle East and Ukraine, as well as a possibly fractured relationship between the U.S. and China, will also be supportive of gold prices. So a relatively stronger dollar and a lower pace of U.S. interest rates cuts may not necessarily spell the end of the yellow metals rally. Shifting dynamics made gold one of the biggest surprises of the wider commodities market in 2024. It recorded persistent rises towards the end of the year, just as the other metals, both precious and industrial ones, largely struggled due to lower economic growth in China. So let's see where we at. Okay, market chatter has now turned to whether or not gold can cap the psychological 3,000 an ounce level. The yellow metal remains within touching distance of the mark. Its rise, as well as investor appetite, has been relentless. Many, including Goldman Sachs and Bank of America, believe the price level to be feasible, especially in the second half of 2025. So I know that Bank of America put out a projection that gold would hit $3,000 an ounce in 2025. I didn't know Goldman Sachs did that too. So that's going to be pretty interesting to see if we hit that level. Of course, the macroeconomic and geopolitical climate in the first half of the year will ultimately dictate the direction of travel for gold, with many cautiously betting on an upward price trajectory for an already pricey precious metal. I don't believe that it is pricey, but I mean, it is elevated, but gold still, it's still below its 1970s inflation adjusted price. So, I think that gold will hit $3,000. Obviously, it's not a question of if, but it's a question of when. And so let's go ahead and look at the charts really quick and see what the charts are saying. If we can get any other information from what the charts are saying. All right, so same drawings on the chart I showed last time. Bull flag here. Boom, boom, boom. Gold shot up again. I mean, it's almost another bull flag forming, but these big candles does kind of make that kind of wonky. So gold has been pretty much, if we zoom in, let's go here. Gold has found a support level, and the support level looks to be in the 2600s. So if we were to draw a line, let's say, okay, let me go ahead and get my tools out. If we were to draw a line where gold support is, it keeps touching this level here, about 2600. So you can see that there. That's like a support level for gold. And this is on a weekly chart. So as you can see, um, gold broke out above 2,600 for a while. Then it came back, tested this, and bounced up, came back, tested it again, bounced up, came back, tested it again, bounced up, came back, tested it, almost tested it again right here. So when we're looking at that, this is on the daily chart. So obviously, test here. It did break below, bounced back up. And then it struggled to break above it right here on a daily, but then it ended up breaking above it. So as you can see, 2,600, it seems like a psychological level for gold, in my opinion. So that's been kind of the floor. And so since it already ran up to 2790 or wherever it hit, I think it's 2790. It's obviously come back, but it's still staying very elevated. So I think that gold is definitely locking and loading for this next move up. How long is that going to take? I'm not sure. Obviously, you got Goldman Sachs and Bank of America saying in the latter of 2025 that may be the case. Maybe Trump's administration comes in, and we need to see what they start doing and what's going to happen in the macro environment and what's going to happen with gold in that sense. But we'll see what happens. But it's holding strong at 2,600. And it's bounced up to 2,700 a few times, close to 2,700, and but it's come back down. And so that seems to be the psychological support level for gold, the physical metal. Now the stocks, that's a whole nother story. So I do want to get into, like, we saw some discounted stocks come up, and I want to get into that. So I want to show you some of the stocks that I've been buying. So I've been positioned in New Fortress Energy for a while. I was buying them back down here towards $8-9. $9. I was loading up, and then now they're up to $15. So as you can see, New Fortress Energy was sitting at about $60 in November of 2022. They had some things happen with their contracts in Puerto Rico and such, but it was a misinterpretation by many investors. So many investors started selling their stock off. But they're projected to keep cash flowing and cash flowing and cash flowing for the years to come, because they have some solid contracts. They got some solid management as well. And as we can see, they started to bottom, and then now they're starting to run back up. So they're at $15, but they're still far off from $60. They're high. And we also have to look at it in the macro sense, of these AI data centers. They're obviously, there's been a lot of news about nuclear energy and such, which was very bullish, still bullish. But natural gas is a form of energy that we already use a lot of in the United States and many other places too. But natural gas, the price of natural gas has been just plummeted for a long time. It's been at lows. It's a big discrepancy between the natural gas prices here in the U.S. versus the natural gas prices in Europe. And so when we think about that, okay, it's very cheap here, very expensive there, and there's a big discrepancy. And so with Trump wanting to come drill, baby, drill, supply energy, things of that nature, that could be bullish for exporting and more countries, buying natural gas from the United States. But looking here, these AI data centers, they're going to need natural gas as well for energy, especially if they are trying to lean off the carbon emissions or the hydrocarbons. Well, natural gas is a hydrocarbon, but it's a cleaner form than oil if they're trying to lean off oil or coal, right? But, just thinking about that, like, okay, this could be an opportunity. This isn't financial advice, but this could be an opportunity for someone. They pay about 2 to 3% dividend. So my plan is to ride it up as long as they're beating earnings and they're printing cash. I'll ride it up, for double my money at least in the future. So this is one stock that I started buying. I also started buying Devon Energy. I've had my eye on Devon Energy for a while. I've been in and out of this company, um, but it's just one of the major cap stocks, right? Devon Energy has been um, it's pretty much been pummeled. It's been pummeled, so plummeting for a while. So you can see it reached up to $80 back in 2022, came down to 49, reached back up close to $80, and then now it's just been selling off significantly. So this is a solid company. They pay about 6 to 7% dividend. This is kind of like a blue chip oil company. I mean, even if you look at, the monthly chart, right? Devon Energy back in the previous oil bull market hit over $120. That's if they didn't dilute any shares, but it was about $120. And at the lows of COVID, they were at about, anywhere from $4 to $10, right? And those prices, I'm just like, I don't know if we'll see those prices again unless there's like a major black swan event. But right now they're sitting at $30. So we haven't seen these prices since, 2016, right? 2017. I mean, ever since off the COVID lows, it hasn't come back down to these levels. And so that's a company that I've been buying. It's kind of like a blue chip oil company, energy provider. I've been buying them. I've also been buying some Schlumberger. So Schlumberger does oil field services. And as you can see, I mean, previous bull markets from 2007 to 2014 hit about $120. Right now, sitting at about $38. And it's been hovering around this place for a while. Many people that I watch that do valuations on this company say that it's undervalued and that it's a good buy. Obviously, the COVID lows here, we're probably not going to see those prices again unless there's a black swan event. But this one is one that I've been buying as well. So, I mean, as we can see, even back in since the pandemic, started, I mean, it hit about $62. And I mean, now it's sitting at $38. So there's still room to move up in this company, and it pays a dividend as well. So that is another company that I have been tapping into, buying in my portfolio. And so some of you have watched, if you haven't watched the interviews that I've done with Steve from Unemployed Value DGen, he does a lot of deep analysis on many companies. And so I encourage you to check out his newsletter. But I want to pull up. So he actually got the New Fortress Energy plug from him. But there's been a few that he's brought up that we've talked about on the channel, such as Douglas Elliman. This is a real estate company that deals in luxury real estate, and sold off significantly since since its lows. I mean, it's just been selling off, right? But the thing with this company is that there was a delay in some of the profits from the sales of property over the last few years, and so those are going to be coming on the books soon. And so this company could, potentially get back up to $6-7 or whatnot. And so you could easily double your money in this company as well. So this is another one that I've been buying as well. So I got to get going. I'm going to be back with some more interviews this week, and I'm going to start building out my schedule for this year. And so I'm happy to have you all, and thank you for being supportive of the channel. I'm looking forward to putting out more content and everything as I continue to be on this learning journey with you all, and hope that you all are good. Hope that you all had a good new year, and looking forward to staying engaged as we move forward in these markets. All right, take care.